For more on Twitter's upcoming IPO, we are joined by Denmark West, Operations Advisor at K1 Investment Management with a specialty in digital media. Thanks for joining us tonight.
Thank you.
Do you agree with the consensus opinion right now that we're not going to see the same thing happen to Twitter that happened to Facebook with its IPO?
I think the challenge is they did a secret filing.
Yeah.
There's no information available in the S1 as of yet. We've got some speculation and some estimates based upon some marketers and researchers, but we don't know yet. And in order to know if we're going to have a repeat, we have to know what the valuation is.
Okay, so because we don't know exactly how much revenue they've got, this is a problem. But on the other hand, the fact that they are filing privately, or so that we're not going to get access to this, or the public is not going to get access to all that information, it gives them an advantage in that they can test the waters, so to speak. Also, I mean, one of the mistakes that Facebook made, I guess, or what we realized through the S1 filing, is that they didn't have a mobile strategy.
Or a mobile business.
Or a mobile business, right? So, I mean, I guess that's the advantage of doing something privately, right?
Well, the challenge is that information will come out anyway. The regulations don't say that you don't have to tell people. The regulation says you have to tell people at least 21 days before you do your roadshow, and the roadshow is anywhere from 1 to 3 weeks, depending upon the nature of what the lead underwriter and the co-manager suggest. But you still have to tell people what's in the file.
But you're only giving them 21 days. Is that enough time for an investor to really take a look at the books properly?
Well, you've got two types of investors. You've got the individual investor, you've got the institutional investor. 21 days plus a roadshow is plenty of time for the institutional investor. I think that in this particular case, you've got two types of individual investors. You've got the people who do the work, and you got the people who basically listen for a good stock tip. And the people who do the work, that's still going to be plenty of time. This is going to be one of the best covered IPOs that we've seen in some time.
2 days straight.
And so a lot of the researchers are going to really see this as an opportunity to prove their chops by telling people what they see, how they're analyzing the company, and what they project in terms of stock performance. And because of that, I think that individual investors merely have to look in order to find the information that they need in order to come to a reasonably well-informed decision.
Now, about mobile, I mean, the difference between Facebook and Twitter in terms of mobile is what?
Well, Twitter was a mobile-first company. The whole notion of the company. I remember I spoke to Jack Dorsey in 2007 at a conference, and he was trying to explain it to me, and I'm unfortunately not bright enough to understand it. But he told me that one notion of how to think about it was broadcasting SMS. And so that was how we got to the 140 character limit, and that's how you can sort of think about it being a mobile culture activity. If you think about when you want to message, you're either going to use a messaging application or you're going to use SMS. And this is one way to think about making that SMS available to the world.
Okay, and speaking of broadcasting, I mean, a lot of people use Twitter to send information out to all their friends about something they're watching on television. And so Twitter has made some deals with some broadcasters. Tell us how that might work in terms of generating revenue for Twitter, because of course we know they've got the mobile ads, but this could be another revenue source for them, correct?
No, I think it definitely could be. And if you think about where the advertising dollars are, the advertising dollars are disproportionately associated with television-based advertising. And if you think about where the television producers, content providers, and distributors are trying to go, they're trying to get more into this engaged interactive framework. And so they're doing a number of things to try to get to multi-platform distribution, but more importantly, they're trying to get deeper engagement with the users. Twitter has far and away surpassed the rest of the pack in terms of the social television or the social viewing aspect of how you actually interact with the television program. What is the sort of digital manifestation of, you know, water cooler chatter, right? It is really what Twitter has manifested. So you can think about it in a couple of ways. One of them is you can start to think about how do you actually get interesting data around what's going on with the television show. Another one is how can you leverage what's going on with the show to do really interesting targeted marketing around that show? Or how can you actually use that as a platform for advertising within a stream? How do you actually close off the stream, clearly identify the stream? This is a stream associated with a particular show. And then how do you actually advertise against that? There's a number of ways that can actually make this into a pretty lucrative opportunity for both parties.
Okay, so we'll have to see what happens there. But just quickly, we've got to wrap it up, but I want your take.
Sure.
Do you think the retail investors should get into Twitter, the IPO? Yes or no?
I'm bullish on the business. I need to see the numbers.
Okay, fair enough, fair enough. Okay, thank you so much for joining us. That was Denmark West, Operations Advisor of K1 Investment Management with a specialty in digital media.